Andrew,
Yep.
how you doing? You're live on the air with Benzinga's pre-market prep, brought to you by Options House. How you doing today?
Doing a little bit better than last night. Last night we saw the futures down about 10 or 11 points. We broke 1900 to the downside, and we completely reversed on more news out of Russia. Now the futures are up about 7.5. For the last 2.5 years, I run basically a long book. I'm mostly long stock market. I've cut back a little bit of my longs in the last couple of days. I watch a lot of price action, price momentum, and price action, price momentum is pretty weak. Anytime we get a rally in the market, it gets sold. And even if we're unchanged during the day, it gets sold. So price action, price momentum has been very, very weak. 1900 is a very key level. Now we're back above it. But today should be a very interesting day in the market.
Hey, Andrew, Dennis Dick here. And actually, I couldn't agree with you more. It seems like this buy the dip mentality has flipped over to sell the rips. And every time we get a pop on some stocks, they are selling them here. Now, overnight, the buy the dip has worked as we are 23 points from those lows. Is this the reversal day? Is this the reversal day to change that mentality back to so the buy the dippers start coming back in and they aren't selling the rips?
I would like to hope so, but the fact of the matter is that over the course of the last 2 years, I think we've had 7 mini corrections of 5 to 10%. And if you think about how much we're really down, I think the futures top ticked at 1984 half. So we're down right now 70 points from the highs, which is only 3.5%. So it hasn't really got that ugly. We had a huge panic day on the 31st when the Dow was down over 400 points. We are still up on the year. So I don't think this is something. I think this is something that's going to get panned out over time. I continue to reiterate the fact that I do not think that we are going to have a major correction, and I'm talking 10% hot and more, until the 10-year bond hits above 3%. And if I think the 10-year, which is going to happen eventually, the government said they're going to keep their rates really low. If we get above 3%, I think we go to 3.5 in a heartbeat, and then I think there's a big flush out of U.S. equities and into bonds. So I think this is a mini correction. I continue to stay long. I get nervous and I lose money on days where we go down. But I am stock specific. So it just depends on that specific stock.
Hey, Andrew, I just want to talk to you a little bit about the pre-market trading and how you interpret it, or what you're doing. I know Dennis likes to get up a lot at 4 o'clock and watch that 4 a.m. open. I like to watch the spoos before I go to bed and maybe place an order accordingly. Are you out there? Are you just out there monitoring the moves in the S&Ps, or are you doing any kind of specific trading into equities? How do you use it as an indicator while the regular markets are closed?
Right. I mean, I actually bought, and I don't actively trade the futures that much, but I actually did trade them during the day. I predominantly trade equity options, but I bought futures during the day yesterday. It ended up being a profitable trade. And then last night, we were down 10.5, and I was like, this is ridiculous. So I bought 5 minis, and then I had a 10-point stop. And then I wake up this morning, and then they were up 10 points, and I sold them out. So, I do monitor it overnight. I usually wake up once in the night, maybe 2:30, 3 o'clock, and the first thing I do is go to my phone and see where the futures are trading. So I kind of monitor it because, my portfolio, even though it's not specifically an SPY or the futures, mimics a portfolio of tracking the S&P. So I know if the market goes up, I know when I go into work tomorrow, my equity options in general should be up money because the market's up. So I do track it a lot. I think the key level isn't the 1900. I think it's 1880. If I specifically wanted to get long in the stock market, I could use a stop or a mental stop in any long positions under the lows of the Globex session today. And I don't have an exact print of how low they got, but that's where I would use a stop.
Hey, Andrew, I always follow you on Twitter there, and I always notice you talking about these out-of-the-money calls and puts, and you're always looking at where some big institutional or big players are coming in on these out-of-the-money calls and puts. Can you just talk about that a little bit? I know that's one of your big indicators.
Yeah, so basically, I was a market maker on the floor of the Chicago Board Options Exchange for over a decade, and what we'd watch was institutional order flow. And, it first started triggering when we would have a Merrill Lynch broker come into our pit, and he would sell 10,000 put spreads in Apple. $10 put spread for $3.5, a $5 put spread for $1.75. Usually try to get about 30% of the spread. And for a year and a half, it wasn't every week at a certain time. It wasn't always once a week, but around once a week, whoever this was, some trader, it could be someone in Ohio, it could be Iowa. I mean, it could be a bank, it could be a hedge fund. No idea who it was. Every single week, they were just printing money because Apple never went down. They just collected the premium on selling put spreads. So I started watching this a little bit more. And then we created a scanner. So it's a proprietary scanner called Option Hacker, where I did a query search, and then it spits out bullish and bearish signals throughout the day. And then I trade my own capital on that. So there's 8,700 publicly traded stocks. There's 4,199 stocks with options. There are currently right now, and the exchanges are fighting very hard, no dark pools in options. So there's dark pools in stocks. There's HFTs in stocks. So if some institution knows about a merger and acquisition or a deal going on, and they want to buy a bunch of calls, they have to do it, and I will see that order because it'll be flagged on unusual option activity. One more point is every single stock has normal volume in a day, known as usual volume, okay? Bank of America might trade 500,000 shares, 500,000 options. And then if it's X times usual volume, well, then it becomes an unusual volume, and then our scanner picks it up. So we're trying to basically cipher, a lot of the fluff trades into what is an actionable idea based on, what institutions are doing. And yesterday in SYY, these calls tripled in value in about 2 hours. They're out of the money calls. They're expired actually today. So that's what I watch.
So when you see these out of the money calls being bought, then you come in and you kind of follow the money? Is that what you do?
I mean, I don't have enough capital to go do every single trade.
Okay.
So you never know a trader's stock position, and that's part of the game. Okay. So this is a big game. I always say the same thing. If you're trading stock futures or forex, it's like playing chess. I will never, ever be able to beat the computer in chess. They're better than me. But trading options is like playing Texas Hold'em, where there's bluffing mechanism involved. So we never, ever know a trader's stock position. Maybe they're buying upside calls and shorting stock. Maybe they're doing a pairs trade. So I usually go through a trading plan, and the first thing I always say to myself is, have I traded the stock before, and have I made money trading the stock before? Because there are certain stocks that I don't trade. I know personally I don't like trading unusual option activity on retail stock. I just historically not been able to make money with retail stocks. So I say, haven't made money trading this before. Then I bring up a chart. If it's a bullish chart and the signal's bullish, then I'll take a trade. If some stock is on its 52-week low and they're buying calls, well, that's most likely a hedge against a short stock position. So, like I said, we never know a trader's stock position on, so it can be a little bit more challenging. Obviously not every trade's going to work, but, it's consistently been profitable throughout my 12 years of trading.
So it's another tool in your toolbox then, Andrew.
Right, it's my only tool. No, I I do trade. I trade a little bit of earnings, but I would say 90 to 95% of my trading is watching the scanner called Option Hacker, watching the scanner, and decide what trades are good for me. So I usually take in a day. I'm a very active equity option trader. On a heavy day, I'll trade 3,000 options, and that's all point and click. None of those. I'm not remote market making. So on a busy day, I'll take 6 new entries, and then if I buy calls, I always have exits. So if I buy calls for $1, first exit will be $1.20, $1.40, $1.60, $1.80, $2. So I'm not like sitting there holding these positions waiting for a home run every time. I'm always trying to piece out of the position. If I see on the daily chart like a big tail on top, or if I see a rounding top, I have no problem exiting. So yesterday I sold some Chevron calls that I was long. I took a small profit. I had White Wave. I was long calls in that. I sold those. So I'm always tweaking my position, moving it around.
Do you ever have a problem with liquidity in some of these options? Because obviously, if you're trading the big momos, there's all kinds of liquidity in these options. But what about some of the thinner ones if you're trading them? Do you work the stock against it, or how do you work the liquidity issues?
Well, what I usually do is what you can do is I look at the bid size and offer size. Okay, so if certain stocks, Facebook's going to be a couple thousand up, and then something that's really small is only going to be 30 up. So I have to tweak it because I know if I'm going to buy the offer and I'm going to become a market taker, that at some point if I want to sell them, I might have to be selling the bid. So I never want to get in a situation where, I would be bigger than the marketplace. So I constantly looking at the bid and offer size of the options and seeing how big that liquidity is. That's a great, great point, because I'm so active trading. I can't take a position where I'm so long where it's hard to get out of. Like I was long 900 of the Rio set 60 calls, and I had to sell them. I started selling them at 90 before earnings, and I sold them for 85, and because I had too big of a position. So that's a great, great point, and that's something I'm realizing a little bit as I trade a little bit bigger, that I can't be as big as I'd like, because there is that liquidity. I can always maybe try to find a different option that has more liquidity. In the money options are going to be wider. So if I buy in the monies, maybe I can buy out of the monies, or I can always, in trading, I can always tweak my strategy. If they buy out of the money calls, I think it's a good trade. I could sell put spreads. I could buy call spreads. I could buy call flies. I could swing trade the stock. I could day trade the stock. So just using that signal that I get, I can do it in so many different ways.
When I talked to you last time, you had a couple favorite stocks that you said you trade almost on a daily basis. It's just kind of like your go-to stocks, and I believe one of those was Facebook. Am I correct in saying that, or am I making?
Yeah, I love trading the Facebook. It's probably been my most profitable day trading stock this year. The fortune stocks I trade on a daily basis is Apple, Facebook, Tesla, Twitter. So I'm using the Ichimoku Cloud, and I use a 5-minute bar, and then I'm looking for breakouts. If you think about the way that trading is, in general, an institution's either going to buy or Facebook, and they're going to do it through the course of the day. So if an institution decides they want to put a position on a Facebook, what do? They buy it, but they don't buy it all at once. They buy it, and then an hour later, they'll work their order and try to buy it again and buy it again, right? So those trade really, really well. I personally have found day trading stocks to be the most challenging of any product I've ever traded. I trade Forex, I've traded futures, I've traded stocks, I've traded equity options, I've traded commodities. I think that is the hardest to trade. That's why I stick with these 4 stocks. I've tried to personally trade LinkedIn, Netflix, CMG, Priceline on a 5-minute bar using the Ichimoku Cloud, and I haven't been able to consistently be profitable. So Facebook, in general, is my favorite stock to day trade. I will not take that position overnight, though.
Oh, you won't. Okay, because Dennis is too. I've talked about this with Dennis, and he gets a run at the end of every year from every stock that he's traded and the P&L in it, and it's interesting to see. Are some stocks that that you go to, you keep going back to. You talked about the ones that you like to trade? Do you have any on your no trade list?
Retail in general.
Okay.
I don't know what it is, and I can't make heads or tails of it, but in general, retail stocks do not trade well on unusual option activity. So a lot of times I see activity in DKS, which is Dick's Sporting Good. I won't take a trade. And Ross stores. So a lot of those I don't.
Okay.
Yesterday, I saw a signal from Option Hacker on, they were SYY weekly calls that expire today. They were the 36 calls for 15 cents. And it was a pretty big order. It was about 7,000 options. And I said to myself, have I traded SYY before? Because there's certain stocks where I don't even need to look at the chart. I know the order flow is usually pretty good. SBAC is another one of those that I always follow them at. A lot of the oil stocks were doing really well for a while. Hess, Halliburton, back in the day, Tessera and Valero were doing well when the chart was a little stronger. So I know there's certain stocks that I do get in. In general, I don't take unusual option activity on ETFs. So XLS, SPY, XHB, XME. Those could all be hedged against a basket of stocks, okay? I'm trying to find an order that's not going to be hedged against a different stock. You can trade XLS against the basket or anything individually. So I always keep an eye on that.
Okay, we've had Andrew Keene on here, Keene on the Markets, founder of options trader, author of Trade to Win Using Unusual Options Activity, Volatility, and Earnings. Andrew, thanks for coming on. We really appreciate it.
Thanks, guys.
Okay,
Thanks, Andrew.